Hello, dividend growth stock investors. It's Colby, the DGI Crab, and I'm coming to you today with a video where I'm going to show you a couple of just quick and easy things that I do to evaluate stocks and just overall markets, in addition to the spreadsheet that I utilize where I keep track of the 60 individual high quality growth stocks that this channel focuses on. Now, my key metric that I utilize is what is today's current yield versus the 4-year average. And that's really all I'm looking for, because I've narrowed my companies down to a smaller group of stocks that I think are very high quality, so I can narrow in on one really key metric as I'm acquiring my passive income. But that being said, there are some other things that you might want to consider taking a look at, just to give you some additional perspective on how things are coming along in the market. So I'm going to share a couple of things with you today that I do in addition to that. But before I go any further, I will say that I'm not a licensed professional. You should always do your own due diligence before investing. And the opinions expressed in this video are just the opinions of this one crab. All right, so one tool that I will utilize every so often is Seeking Alpha. I'll go over here to market data. And on the market data, there's a lot of different things that you can look at, but what I like to do every so often is click on sectors, which is what's highlighted here. And the sectors are going to show you this grouping of ETFs from State Street that focus in on stocks that are just within a specific sector. So these are all of the sectors of the U.S. stock market: basic materials, communication services, consumer discretionary and consumer staples, energy, financials, healthcare, industrial, technology, utilities, and real estate. And based on how these particular ETFs are doing, we can get an idea of how an individual sector is performing, both in the short term, like today, or 1 month or year to date, or in the longer term, like over the past 3 years. And if I want, I can click on these and sort them top to bottom to see how they're doing. And we can see so far year to date in 2024, communication services is the best performing sector so far, up 18% overall since the first of the year. And real estate is performing the worst, currently up just 2.8%. Now, this is actually pretty good news to see all of the sectors in the economy right now in the green, even though real estate's not performed particularly well thus far. You haven't lost money on it either. So 2024 has been an excellent year for the stock market, really regardless of what sector you are investing in. I was really kind of expecting to see technology a little bit higher on this, but as of the recording of this video here on August 1st, technology has been going through a bit of a correction, so to speak. So that's probably part of why it's dropped down here a little bit, but really good year for communications, financials, utilities, and industrials. And if you've been following the channel and watching my Friday videos where I'm evaluating which of the 60 stocks that I cover are quote unquote good deals at a given time, we haven't really seen very many things in financials or in utilities or in comms that make the list. That is because those sectors are doing quite well right now, but we have been seeing some pretty good deals on like consumer staples and consumer discretionary. Certainly, we haven't seen our REITs on the channel being particularly undervalued up to this point, but that's just because we're only covering just the highest quality REITs with a really long track record up to this point. There's only 4 REITs in the 60 stocks that I've selected for the channel. American Tower and Realty Income are have been somewhat undervalued up to this point, but not strikingly undervalued. And NNN REIT and Essex Properties have pretty much been fair value in the short history of this channel thus far. So this just kind of gives you some ideas of not necessarily individual stock, but if you're noticing that you've been adding a lot of stocks that fall under a particular sector, sometimes it's a good idea just to come and check out this sector breakdown just to get that perspective, just so you know, well, I've been adding a lot of consumer discretionary because that sector just hasn't been performing super well yet this year. So I like to shop for value. I have no problem loading up on stocks within a particular sector for months on end at a time while not adding stocks in other sectors that are overpriced. I will sit back and wait for value when it comes to individual stocks. And then another thing that I'll use is if you'll go to FinViz. FinViz is a very interesting website. It's just very data driven, certainly not the prettiest site in the world, but I like to look at the different groups. So again, we're looking at our different sectors here. And this is handy because this is showing me the PE ratio. I like to review just kind of what the PE ratio is, the forward PE, just overall for a particular sector. Now, I don't get too caught up on PE ratio in my analysis. Some people, that's an extremely important metric. I don't think that it's unimportant necessarily, but it's not something that I focus on as hard as just yield today versus yield for your average. But if you're taking PE ratio into consideration when you're buying stocks, it can be a really good idea to come in and see just what the overall sector PE ratio is in a given sector, and then look at the PE ratio of the stock that you're thinking about buying. Because this could give you another indication of possible undervaluation. So like, for example, if there's a utility stock that you're thinking about investing in, you might come in here and say, okay, well, utility average PE ratio right now is 20.67. And if the PE ratio of the utility that you're considering investing in is lower than this, then it could be an indication that that particular stock within the utilities sector is undervalued compared to some of the others in that sector. So again, this is not something that I necessarily look at every single day, but it is something that sometimes I will take a look at if I am considering either starting a position in a particular stock, or if I find myself really aggressively growing a position in a particular stock and I'm wondering, well, is that actually a good idea? I can get some higher level perspective by looking at some industry statistics, and that will help inform my decision. Both of these particular tools to utilize are free. You just have to know where to go to find them. I think that these are both pretty interesting, pretty useful. So I wanted to share those with you here today on a bit of a shorter video. You can email me any questions that you might have about investing to dgicrab@yahoo.com. Check the links in the description below to link to a video on each of the 4 tiers where I've broken down the individual stocks that I cover on the channel into 4 separate groups that are based on the age of the investor, which I think is a very important metric to consider, the metric of your own age and time horizon. We want to acquire passive income that is growing. So if you're younger, I think that it's most important to acquire stocks that have a rapid dividend growth rate, even if the yield is a bit smaller. And if you're an older investor who's looking to acquire passive income immediately and you're not going to have as many years in the market, you could focus on that higher yield stuff with slower growth but stable payouts. So that's it. That is the overall strategy and theme of the channel. And hopefully these couple of extra tools are things that you'll find useful as you are doing some of your own research. Till next time, investors, this is Colby, the DGI Crab, signing off. I will see you next time.